with your business model, I guess the veracity of the trades, because they're tapped into brokerage accounts, it's verified, right? Is that how you verify what you see and how people can trust what they see on Blossom?
Yeah, exactly. So as a perfect example, I sold my NVIDIA stock about 2 hours ago. It posted on Blossom within 15 minutes. And then within, half or another minute after that, I'm getting flooded with comments of, why did you sell, et cetera. But it shows as verified, and you can see, my return. All of my holdings are verified on Blossom. So yeah, it really drives a lot of transparency. And then I think that has two benefits of one, it really drives like a lot of discussion. So obviously everyone's now talking about, oh, why did you sell? You can see the arguments for and against, and it's all backed up by what someone's actually doing. And you can see it in the context of my portfolio. So I can say, hey, I sold NVIDIA, but still, 35% of my portfolio, as you can see on my profile, is in the S&P 500. Obviously, NVIDIA's 7% of the S&P 500. I'm not, completely anti-NVIDIA, but I'm trying to reduce my direct exposure.
Max, welcome.
Thanks, Ed. You caught me right when I took the sip of tea.
Welcome to the show. And to listeners, welcome to another episode of Trends with Benefits. Today, we're going to talk about retail investing, social investing. Retail investing is such a term that I think the financial industry has developed, but it's really more about individual investors and how they approach investing. And I think in that sense, the way individual investors invest has changed dramatically over the years. And in particular, today, social media is such a big part of that, where anybody can talk about stocks. Anybody can get a large group of followers based on how they talk about stocks, but you don't necessarily know if you can trust them or not. And I think this is where, Max, where your company comes in, Blossom, which is a social investing app that lets users link their brokerage account data and share verified portfolios and help facilitate discussions around that real data. And so I'm really looking forward to our discussion, because it sounds like Blossom has blossomed into quite a force. What do you have, like 300,000 investors on the platform and billions in linked assets?
We're at 500,000 now. We were 300,000 when we last spoke, but yeah, we're growing at like 50,000 a month now. So no, it's been exciting times for sure.
Really excited to talk to you, co-founder and CEO. So I'd love to hear a little bit more about the history of Blossom and what you guys are really trying to do, and some of the challenges that you face. But this is exciting because I think, and I'm using this term again, retail investing for individual investors, again, has changed. It's been a big topic of the last few years, I think, really starting with COVID and meme stocks and what have you. But even this past year, individual investors are a force. We have an ETF that looks and scrapes social sentiment, which is kind of a proxy for individual investor sentiment. And it's done extremely well as well. So it's going to be fun to talk to you about this. First off, tell me the genesis of the name Blossom.
One of the things that makes Blossom unique is that users link their brokerages. And so we have really interesting insights into the flows and what retail investors are actually doing across brokerages. So we can see how AUM is shifting across different ETF categories, across asset mix. And so, yeah, excited to dive into that, as well as talk about the origins. But I guess kicking off with the origins, yeah, the concept for Blossom, you hit the nail on the head that at our core, we're investing social networks. So some people call us like the Instagram for investing, LinkedIn for investing. It was really birthed around 2021 with the whole COVID, GameStop, Wall Street bets craze. And we saw that as sort of A, like a really positive thing, but then B, like a somewhat negative thing. So the positive thing was, as you sort of mentioned, retail investors, especially millennials, are being very transparent with their investing. They're going to social media to learn. I think there's stats that say that generation is actually going to social media more than financial advisors even. So the transparency is like a really good thing. And I think the openness is a good thing. The bad thing that we saw was platforms like Reddit and Wall Street bets are really driving this very sort of reckless, gambling style, trading, very get rich quick mentality, which, as we know, is very high risk. So we sort of looked at that as an opportunity of, hey, can we actually take the power of social media, which is helping more investors get into the markets than ever before, and actually build a platform that helps people become better investors? And so what makes it unique from platforms like Reddit or, other social platforms is, as you mentioned, that a user actually links their brokerage account. So we have over 3 billion in linked assets, and a user's profile is their actual portfolio. So you can go in and see what I'm investing in. You can see what, your favorite creator is investing in, or even your friends. So, and that is really like the foundation of what makes Blossom special.
And that's amazing to me because, growing up, it's like you didn't talk about finances with, in public, but there's no qualms with that these days, it seems. And people are just willing to show what they have.
Exactly. Yeah. The users on Blossom, it only shows your percentage breakdown. So you can't see necessarily how much money I have. But when we started Blossom, that was like the biggest question we got, especially from, we're pitching VCs or angel investors who tend to skew older. Their first reaction was, no one's ever going to want to share their brokerage. And we heard that time and time again. And then when we launched, like that wasn't even like in the top 5 concerns that people had. Like millennials, my generation, like they're very willing to, share and link if they see that it's something that's going to bring them value. And so we actually find the other problem where people are saying, hey, I actually want to share more. I actually do want to share how much money I have and share these milestones. And so rather than actually taking away transparency, we've added more. So you can now add like a badge that shows like you have a verified $1 million portfolio. You're like verified 50K a month in dividends or something. So people are actually wanting to share more, not less, we've found.
Pretty easy to do with any brokerage account, or have you run into obstacles working with certain brokerages?
We started in Canada. We've launched in the US about 2 years ago. We support the majority of the major brokerages in the US. So Robinhood, Public, Fidelity, E-Trade, Vanguard. One of the this is maybe an aside, but super quickly, like Canada is furthest behind in all the G7 countries when it comes to like open banking. So the policy around open banking is like you as a user are allowed to share your data how you want. In Canada, it's actually the banks that control the data. So ironically, even though we started in Canada, we only support 2 brokerages in Canada, Wealthsimple and Questrade, which are the biggest ones here. But in the US, we pretty much have full coverage. So because of open banking, thankfully.
That's amazing. Again, a part of the origin story, where were you before? What were you doing before? Were you in investing in finance or?
Not investing per se. I was in management consulting at McKinsey. So I did a lot of work with, private equity and, financial models, et cetera, but not in as an analyst or anything. So the genesis really came like I was, 3-4 years out of school, started making good money, obviously in consulting. And then I was really getting started with investing as well and going to YouTube, Reddit, all these other platforms. And that sort of was, so I was really like very similar to a lot of our users in the user journey. So I think that helped me see the need, but I've had the benefit of relying on people much, much smarter than me when it comes to the analyst side and the, investing side. One of our co-founders, Brandon Beavis, he's our CMO. He was a financial advisor and his dad was a portfolio manager. And so he brings a bit of the industry side. But as for me, it was more just the business strategy that I brought to the table.
That's fantastic. And you guys started out originally intending to be a brokerage as well, and then just pivoted to just the social aspect of it. Is that right?
Yeah, 100%. Yeah, it was interesting. I joked it as like the single best decision we ever made as a company. I think we'd be bankrupt if we didn't do that pivot. And with any entrepreneurial journey, there's always those like key moments. So the reason we thought we wanted to become a brokerage was we saw the success of Public in the US. They were having a lot of success with like the social brokerage model. We thought it was really the only way to monetize was, okay, we're building this social platform. How do we monetize? And so we started down the path to become a brokerage, but inherently, like it's sort of at odds being a brokerage with being a social platform. And there's a reason why I think we've seen Public sort of step away from social. We're actually partners with Public now. They're one of our brokerage partners. So at first we saw them as competitors. Now they're partners. And so I think that says a lot, but it was really like, let's say you're on Public, I'm on Robinhood, one of our friends is on Fidelity. Having a broker agnostic platform where it's low barrier to entry, we don't all have to switch brokerages, it was sort of what we realized was. And then the other thing was, we're spending all this time building. If we're building a brokerage, we're just reinventing the wheel. Like there's so many great brokerages out there. We're not really doing anything new or innovative. So we really doubled down on what makes us unique. And then we found, as you know, other ways to monetize. We work with pretty much a huge swath of the major ETF providers and helping them reach retail investors. We work with the exchanges now, like NASDAQ, NYSE. But it was really I think that was like 2023 where we really made that pivot. And since then, like revenue, user numbers, everything is, nicely up and to the right since then. So
do regular investors pay a subscription to participate, or is it supported by your other partners?
We're super transparent with our business metrics. So yeah, we did like 1.1 million in revenue last year. We're on track for 4 million this year. So really strong growth. About 1 million of that is from pro subscriptions. So we have like portfolio tracking, dividend tracking, a bunch of other tools like as part of Blossom Pro. But the vast majority, like 75%, comes from essentially what we call like our brand partnerships business. But it's more or less working with, folks like you guys, Van, NASDAQ, Global, State Street, on basically helping raise awareness. Because one of the things that's very interesting with the retail investor trend, a lot of people will see it as, okay, this is, DIY or do-it-yourself investors are, they're starting to trade on themselves, et cetera. It's sort of like over here. But as I think we've seen, it impacts the industry so much because now all of a sudden as ETF providers, you're having to reach this new audience. So before you're spending all your time, reaching the advisor channel. Now it's like, oh, wow, there's this whole new channel of retail investors that we need to get in front of. So we were really well positioned with that, like with the explosion of retail investing, to be sort of that connector between the provider and the end investor. And we've built a lot of like really cool tools to help providers engage and, raise awareness of their tickers.
So, with your business model, I guess the veracity of the trades, because they're tapped into brokerage accounts, it's verified, right? Is that how you verify what you see and how people can trust what they see on Blossom?
Yeah, exactly. So as a perfect example, I sold my NVIDIA stock about 2 hours ago. It posted on Blossom within 15 minutes. And then within, half or another minute after that, I'm getting flooded with comments of, why did you sell, et cetera. But it shows as verified and you can see, my return. All of my holdings are verified on Blossom. So yeah, it really drives a lot of transparency. And then I think that has two benefits of one, it really drives like a lot of discussion. So obviously everyone's now talking about, oh, why did you sell? You can see the arguments for and against, and it's all backed up by what someone's actually doing. And you can see it in the context of my portfolio. So I can say, hey, I sold NVIDIA, but still, 35% of my portfolio, as you can see on my profile, is in the S&P 500. Obviously, NVIDIA's 7% of the S&P 500. I'm not, completely anti-NVIDIA, but I'm trying to reduce my direct exposure. So versus an anonymous forum, you don't have any of that context. You don't know what they're holding. You don't know, obviously the history of their transactions. You don't know what style of investor they are. So it drives like a lot more. I know I keep mentioning the word transparency, but really like any community, it's such a bedrock of a good community.
Yeah, absolutely. During this whole process, what lessons do you think you've learned about building trust in a community?
That's like the biggest challenge, I think, with Blossom. Like, I think challenge in the sense of like, with any business, there's one problem where, if you can solve that really well, that's what makes the business really valuable. And so that's something we invest like a ton of time and resources in. I think it starts first with like, more or less like who you invite to the party, right? Like if you're having a party and you invite a bunch of like really sketchy people and like a bunch of, people who are going to have, maybe that's the kind of party you want, but people who, just go absolutely crazy, it's going to shape the kind of party versus if you're trying to have a board game night and you invite people over for a board game night, that shapes like that party. So the way that translates to Blossom is with our growth, we're very like targeted. So we work with a lot of influencers and creators. We're very picky with the creators that we work with. So I think there's a lot of ones like, say, Steve Chen, who is a much more of like a long-term investor, a Joseph Hogue, who's more, fundamental, versus there's, the YouTubers who are super high risk, picking like penny stocks and et cetera. Who you work with is going to shape the community we end up building. The other thing is we're very targeted with even the age demographics we attract. So a lot of people assume Blossom is like Gen Z because they look at me, I look young, right? But we actually don't target ads to anyone below the age of 25. The reason for that is we find like under 25, you're not really taking investing super seriously yet. You maybe have a couple $1,000s that you're gambling at like college, but for the most part, as well as just the ad creatives, like how we're talking about the app attracts a certain audience. So that's one. And then the other thing I'll quickly say is kind of building the right champions, like the leaders of the community. And so for us, that started as like the ambassadors and the influencers we work with. They really set the tone of the community. So all of those things, like it's a very nuanced thing, but it's, by and large, like the most valuable thing of Blossom, I would say.
Yeah. Do you see outside of the influencers that you might bring on to help facilitate a discussion or what have you, do you see other users growing and say followers? You have followers, new stars emerging?
Yeah, 100%. So interestingly, like the influencers were really like to solve the cold start problem. So like they're what really jump-started the community, because when you start a social network, right, it's literally, if there's no users, it's a completely useless product. Like if there's no one to talk to. So we needed them to jumpstart. But of course, these influencers, especially the ones with big followings, when you have 1 million followers on Instagram, like you're not really going to be spending too much time like posting in Blossom. Like they share their portfolio, they share their trades, but the actual content in the community largely comes from the actual users, like not influencers. So, and to your point, we've had a number of like really cool rising stars. I think our first user hit organically like 11,000 followers on the platform. Like I have 170 on Blossom, but it's because I'm like one of the accounts to follow on onboarding. So this user, just from posting and engaging with the community organically, grew to 11,000. And I think he was at like 5,000 like a month ago. So like the growth has been like exponential over the last like few months. So we're definitely starting to see that. And we actually just started, I don't have one right beside me, but like almost like our version of like a YouTube plaque. So we send them a cool plaque when they hit the milestone.
Oh, neat. It's almost like the platinum albums or something,
Yeah, exactly.
In terms of your users, do you find that any of these subscribers have or work with financial advisors, and how might financial advisors learn from your model and working with a younger generation of clients?
Yeah, I think that's a really good question. So Tim, our head of brand partnerships, and I have been to Future Proof, which I'm sure many of the listeners may have gone to as well. Awesome conference. The way that I sort of see like Blossom as fitting in like the life cycle of an investor is like at these conferences or advisor focused conferences like Future Proof. The trend that I've seen is like really advisors focusing on like higher and higher net worth clients. Like if you have, let's say $100,000 portfolio, you're not really interesting to most advisors. Like your portfolio is much too small. Even like, I think once you get to 1 million, then you start being interesting, but everything like below 1 million is like not really serviceable for most advisors. So I think the way the world used to be like 5 years ago or even 10 years ago is people like really wouldn't invest too much. Like they'd maybe invest in mutual funds up until they hit like that range, and then they'd go to an advisor. Now it seems people are like ditching mutual funds in that early stage, doing DIY and, retail investing. And then, but still, once they hit that stage, they're still going to an advisor. Once you have $1 million portfolio plus, you're starting to want that, advice. And we can talk about at the earlier stage, people are wanting more fee for service, obviously, rather than, just percentage of AUM. But I think like platforms like this are an opportunity for advisors to like move upstream and see, okay, what are investors talking about before they're ready to start engaging with an advisor? How are investors thinking? How is the next generation thinking? Because that's going to be the next generation of your clients, ultimately. That's kind of my perspective on it.
Yeah, I can see that. I'm wondering if like technology might help advisors scale and deal with smaller accounts. I don't know. Have you seen anything like that?
I think so. Yeah, definitely. I mean, I'm not as deep into the weeds of it, but I know in Future Proof, like so many of the sponsors in the booth are really innovative technologies to help advisors manage their back office. And so obviously the more efficiency you can drive in the back office, the more that they can spend time doing what they're actually, valuable at, is actually giving the advice, right? So I think certainly like, hopefully we see a convergence where advisors are able to move earlier and earlier on in that journey, because we certainly don't see Blossom as like replacing advisors. Our goal is like for investors, if you just have $10,000, if you just have $100,000, for you to have the tools and the access for information to get smarter and to teach yourself how to fish. So then, all of us want to have multi-million dollar portfolios. At that point, you're not going to an advisor and say, hey, I know nothing. Just, give me the fish. You've already been taught to fish, and you can engage and have those good questions. So the other thing I'd say for advisors is like, we've heard more because we work with a lot of the ETF providers. So we hear it from them as well. They're having advisors where their clients are saying, hey, I saw this ETF on social media, or say, and I won't mention tickers, but, oh, I saw this ETF on Blossom. What do you think about that? And so you can see like people are going to be influenced by, social media, by these platforms regardless. It's good to be on top of, what the narrative, what the discussion is, so you can be prepared to answer those questions.
Yeah, absolutely. I mean, as you build and grow, and it seems like you're continuing to do so, do you think you'll ever revisit the idea of becoming a brokerage or having investment services?
I don't think the idea of becoming a brokerage, for the point I mentioned earlier, where I actually, the more I've dove into it, like I think the synergies aren't there. Like a huge core of our business is working with providers. That's something that's very challenging to do once you're a brokerage, because you're essentially like a regulated investment entity. So it would basically be cutting like what I think has been the most successful aspect of our business, plus the added aspect of, you're kind of closing off the community. You're saying, hey, everyone needs to use our brokerage. Mm-hmm. So that's one aspect. But some of the other like bigger ideas that we have, like one, we have so much room to grow in, US, right? Like we only have, of our 500,000 users, about 250,000 in US, 250,000 in Canada. US is a 10x larger market. We can easily support 2-3 million users in the US. So there's a lot of near-term opportunity, but we see opportunity in, as you mentioned with the social sentiment ETF, we could become, an index provider and leverage our data to build, partner with ETF providers on similar ETFs. We could, work with advisors who are on a fee for service basis to help reach investors on Blossom once they level up, or once they have a big life event, right? Like if, with the linked brokerage data, you can actually see, okay, this person received a big windfall. That's maybe perfect time for them to start engaging with an advisor or a financial planner. So there's a lot of things that we can do to like expand our role in the user's journey or in the investor journey. But I think at the end of the day, like I think it always makes sense for us to sit on top of the brokerage, because then we're not competing with any of them. And whether you're at Fidelity, whether you're at Robinhood, whether you're at E-Trade, like we can service all of those investors rather than just the ones who use our brokerage.
You're going to have such great data on individual investors and what they're thinking, what they're doing. Maybe we can talk a little bit about that right now, and perhaps trends that you're seeing in terms of asset classes or themes. What's top of mind for you right now? Or one of the biggest themes that you see in terms of asset allocation or trends among users?
I love this question, Ed. As maybe you can tell already, I'm sort of a data nerd. I studied economics and stuff, so I love diving into our data. And I think there's a lot of like really interesting things that we've seen. So I always love talking about it. But I guess just for context, so on Blossom, and if I look up, I'm just kind of looking at my charts. But if you take basically all the community assets, aggregate it together and treat it as like one big portfolio, about 60% of it is in stocks, 32% in ETFs, 7% in cash. The interesting thing is actually in Canada, it's much different. It's like 60-30 in US stocks versus ETFs. In Canada, it's actually flipped. So Canadians hold more ETFs than stocks, which is somewhat of an interesting insight. Of the ETF bucket, like North American, like index ETFs, like say S&P 500 or NASDAQ 100 are like by far the number one category. So about like 47% is held within those North American index ETFs. But what was really interesting is like since the tariffs or since like Liberation Day, we've seen actually like a shift in that. So one is we saw like investors shift more to cash. So the cash allocation increased from like 4% to 7%. And then if you take all the ETFs and categorize them, the only one that actually saw a decline in AUM after adjusting for appreciation was the North American index ETF. So even though it's the biggest category, it actually saw like a 9% drop, and people were reallocating to commodities, to crypto ETFs, to international ETFs, and of course to cash, as I already mentioned. So you actually like, we were able to see in real time that, investors kind of getting spooked by, what's going on with the US economy, reallocating some of that capital, which I think is a good thing. Like in general, investors tend to have a home turf bias, and obviously the PE ratios of international emerging markets are so low. So it kind of spurred people to drive a bit more diversification. So I can keep going on and on, but let me pause there before I take over the mic too much.
Keep going. In terms of other trends that you might see, I find it fascinating that people, and of course, this is probably a bias, a professional bias that I put on individual investors having the wherewithal to think about international investing and commodity investing, where I think many investors here in the U.S. have just a home country bias and maybe don't want to think about overseas. But it's encouraging to see that your user base has expanded upon or across borders, if you will, in terms of their investment allocation.
Yeah, 100%. I mean, in general, I think the Blossom audience does tend to be like a smarter audience. I mean, obviously I'm biased, so I'm going to say that, but I'm hoping that that's a trend across retail investors more broadly because, again, maybe my personal bias, but I'm also doing that. Like I see, we see the PE ratios, we see all the headlines, S&P 500. There's so many sort of warning signs that it's, expensive right now. And so, I'm not obviously selling my S&P 500, but as I'm doing my more monthly buying, I'm choosing more international exposure. And so we see that, reflected as well in the community. The other big trend, which I think is a super positive trend. The other trend that I think is positive and it's negative for certain reasons. And I think we were planning to touch on this, so I'll jump to it, but is sort of this like massive rise in like the covered call and single stock ETFs. So the interesting thing is it's not just older investors. Like in general, when people think of covered calls, they think of, when you're in the consumption phase of your portfolio, there's obviously benefits for those products or well documented like scientific research, right, around the psychology of like being in the consumption phase, how it's very challenging for people to like sell their positions. So I think the birth of covered calls was really to address that problem. But I think what we're starting to see, like, which I would say is potentially problematic, is a lot of like yield chasing behaviors. So like beginner investors who maybe don't fully understand how covered calls and especially covered calls with leverage work, just picking products based on the highest yield. So this single stock ETF, which is basically like covered calls with leverage on like, a risky stock. They're like, oh, it has 50% yield. Let me, and like, if you understand that product, like be my guest. But I think the concern is people who are buying it who don't understand it, which I think we obviously see a rise in that on Blossom, but I think across retail investors in general, there's a rise in that.
Massively popular products, and good to point that out. It made me think, do you guys have like a moderator of discussions on the platform? Or if you see something like that, decide maybe we should put out a piece or have a discussion about what's really going on there?
I mean, we've found the community is like pretty good at like having the debates. So if you look on Blossom, like the irrelevance of dividend theory is like a hot topic. Like there's some people who are super growth investors, some people who are super covered call investors. We try to take like a relatively neutral stance. And again, in my comments, I'm not trying to like bash covered call ETFs. I think they serve like a very strong purpose. It's more around like making sure people are understanding like what they're buying. I think the things that we try and do is like build more educational tools into the product. I mean, one of the things anytime like a penny stock is mentioned, like less than 2 billion in not AUM in market cap, there's like a warning that says like, hey, investing in small caps is risky. Any promotional posts will get like flagged by our like AI bot, and then those will be moderated. We don't really moderate on the basis of like subjective like opinion, but we do try and stop like, if you go on a lot of social networks, they're getting spammed by like, send me $10,000 in crypto and join my Telegram group. Like on Instagram, TikTok, like those are super prevalent. Like on Blossom, like you will hopefully rarely see that because we've invested a lot of like time and resources into keeping that going away. But it's challenging, right? Because my opinion, again, there's some people on Blossom that are like, I'm a younger growth investor. That's not, there might be an older passive income investor. We have completely different styles. The purpose of Blossom is for us to like learn from each other. And from our perspective as like the social network, we don't really want to say, okay, one way is right or one way is wrong, Just
let people talk it out.
Yeah.
I'm wondering if there's been anything that you've seen in terms of investor behavior that surprised you.
That's a good question. I mean, I guess that is the number one thing that surprised me was like the rise of some of these like the kind of yield chasing products. But so that I think is one. I mean, this is very maybe niche to me, but I find that the differences between Canadian investors and US investors are always like very fascinating. So like the difference in like ETF focus, the sector differences. So Canadian investors are very like financials and energy heavy, which is tied to like our home turf bias. US obviously much more like tech heavy. And so if you actually look at the top tickers held, they can vary quite a bit. But as far as surprises, I think I've covered most of them already. So nothing super different than what we've already talked about.
Do you think the era of meme stocks is over, or that craze?
I don't think it's over, but I think it's certainly more like muted. I mean, we saw with Open Door, even on Blossom, like, I mean, there's about over 2,000 holders of Open Door. I think probably before the whole run up, there was like 500. But like that doesn't even put it in the top 100 tickers on Blossom. So I think with GameStop, like it would have spiked up. It was probably like a top 20 most held holding among retail investors, if I had to guess. And so like, I think it's a lot more muted. I think there's a lot more intelligent like discussion around it. So if people are buying, like either they kind of know what they're like gambling with. Maybe it's just on Blossom. I think like the meme stocks isn't really like where beginner investors are like, you know, taking riskier positions. It's more, you know, with things like leverage and things like this that I think have become like a, you know, a bigger, not concern, but like bigger point of education. Cause I think with meme stocks, right, there's so many new investors joining. They're, you know, listening to these arguments of, oh, look, GameStop's like $1. If it only goes to $100, like you all 100x your money, all that. Like there was like an educational gap there. And so I think now investors have become smarter, more sophisticated, but there's still an educational gap between like some of these more complicated products. But I mean, it's a good sign, right? Because these products are much more complicated. So if that's where investors are, you know, if there's still the knowledge gap, we've come a long way from 2021.
Do you think your subscribers, investors, understand the benefits of, say, diversification, or how different asset classes work with one another, or do they tend to invest based on themes or, you know, various thematics?
I mean, it depends so much on the investor. I would say, like, I think in if any community, again, I'm biased, but I think like the Blossom community is like a lot more savvy and like smarter when it comes to diversification. I think it's like the life cycle of any investor's journey, though. Like, if you're just getting started, I mean, even like if you're trying to teach your son to invest, a lot of ways, or son or daughter, right? Like a lot of ways that people teach how to invest is, oh, think of, you know, the products that you buy, whether it's McDonald's, whether it's Disney or whatever, and then, you know, choose stocks based on like what you're buying or investing. Is that like the best investing strategy from a diversification problem or diversification standpoint? Like almost certainly not, because you're buying like a bunch of companies that cater to, say, like a 14-year-old boy or girl. But it is like a good like first step. And so I think with Thematics, like it is like a first step for a lot of people because it's very understandable. But then like I think as they develop or as they, you know, learn, they build more sophisticated strategies. The other like very first starting point is a lot of people just buy the S&P 500, which again, like is I think has historically worked really well. From my perspective, it's like now once you're learning more, I wouldn't actually just buy the S&P 500 personally because I you know, I want more diversification internationally, et cetera. But is it like the worst thing in the world? Like to me, I think people getting started is like the number one hurdle. So once you get started, once you get your foot in the door, then you're going to start learning and building these more like sophisticated strategies. So I think in Blossom, you have investors on the whole life cycle. So you see people in the early stage where they are doing more of that and people in the later stage who are diversifying more.
Yeah, I totally agree. I think you got to make it relatable, like you said, and start out with something that they can, it's kind of more tangible to them, whether it's a theme or an individual stock or story, something that they use. And then, the theme perhaps gets them introduced to investing, and as they develop wealth and they want to protect it.
Yeah, 100%. Yeah.
So tell me, what's next for Blossom? What's your vision going forward? More growth in the U.S.?
Yeah, I mean, U.S. growth is like our number one focus. It's where we're investing the most time and resources. I think there's, you know, our ultimate like vision for Blossom, as I kind of hinted at, is to really be the like one-stop shop for like essentially, you know, managing your portfolio, getting social insights, being your sort of social, you know, pulse on the market and social community, like obviously displacing Reddit, but then also like, displacing like essentially displacing a lot of these tools where you're jumping around to all these like different spots. I mean, on Blossom, like, because people are going there for their social media, like you open social media more than really any other app, whether it's Instagram or TikTok. And so our sort of thesis is, once you can kind of be that one-stop shop for people to get their social insights, then they're also going to use you for their portfolio tracking, their dividend tracking. Like I'll check Blossom more than my brokerage. Like I only really open my brokerage to like place a trade, but I'll actually check my portfolio on Blossom. I'll check my dividends on Blossom, like everything else. And so that's our ultimate vision. And I think we can, innovate in that regard because we're not, obviously as a brokerage, there's so many different things that they have to worry about, whether it's, launching margin, launching crypto, launching all these. So we can just be specialized and focused on, the social aspect, as well as just bringing investors tools to help them, become better investors together. Right.
Yeah. Yeah. Well, it seems like you guys are doing a great job so far. This next question, maybe I'll ask it in kind of two parts. One is kind of more about long-term trends. And we talked a little bit about trends that you're already seeing, but I guess from your personal vantage point, what's one long-term trend in, say, retail investing that you see playing out over the next several years? And then the second part to that is there a trend or theme that really excites you just personally and you love to invest in?
Well, I'll answer the first one quickly because I think I covered it a little bit. I mean, I think the two biggest trends from my perspective are just like the transparency. Even in the last 3 years, that's like really transformed how retail investors are behaving. They're sharing a lot more. They're super open with their finances. I think just retail investors in general is actually like a big trend that's shaping the industry. So people think of, okay, what are the trends in retail investing? But because of the explosion in retail investing, like that's a trend that ETF providers need to be focused on, that the industry needs to be focused on. Global X here in Canada, right? Their AUM from retail investors surpassed their advisor channel. They put out a press release about it in last year. And so because of that, they're okay, we need to figure out how to reach that investor. And so I think that's like a big shift that we're seeing in the industry. And I think it's good because it'll result in more focus on the end investor, more products being built for that end investor.
Right.
As far as the trends that I see personally, I think the biggest one, like the two things that I think I've like leveraged or like used that to me have been like transformational technology is one, which is sort of like the super obvious one of like ChatGPT. I think all of us was like kind of a magical moment when we first used it. But two was like really like self-driving cars. I find like, I don't know if have you been in a Waymo, Ed?
Oh, yeah. They have them in Austin where I'm from. And I've been in those a couple of times. I love them.
So those are incredible. The challenge I found with like investing in those is obviously Waymo is like owned by Alphabet, which is so tied to so many other things where like I was actually bearish on Alphabet because they've had such a search dominance that with the rise of AI, like they had like 95% market share. They're doing a great job in like innovating and competing in AI. But my logic was like, even so, the search, like they have a new real competition. So even if they end up with 80%, it's still like a massive drop in market share. Interestingly, like over the last earnings, like, they keep on putting out reports that, search volume is up, the AI summaries are up, the search revenue is up. So I've kind of been wrong about that, but I'd love to invest in just the self-driving cars. And for any Tesla lovers, you say, okay, well, Tesla. Well, I also think that, I could be wrong about this, but obviously Tesla's had a very different approach than Waymo. Waymo uses LiDAR. Tesla's tried to do everything with cameras. From everything I've read, it seems like the camera approach has like a ton of challenges. And so, yeah, that would be my like broader trend. But I write our weekly newsletter, so I'm always trying to, read up on all these things. I obviously am bullish around AI in general as a trend, but like the circular deals that we're starting to see, like the valuations, all these, it sort of does scare me a bit. So as I mentioned, I sold out of my direct NVIDIA position. I was very bullish on what they were doing with robotics as well. But again, in the earnings, it hasn't materialized into anything like super meaningful. So anyway, that's my little like ramble. But I think since I spend like 80 hours a week on the startup, I don't have enough time to deep dive into these trends enough to build conviction to like make an investment off of it. So I'm a pretty lazy investor in that sense, ironically, where I'm mostly in the S&P 500. But there's pockets that like really interest me about the trends.
Yeah, it was an open-ended question to see where you'd go, and I found it fascinating, your answer, because I think your dilemma in terms of investing in, say, Waymo or something like that, you want that specific exposure as opposed to all of Google, is what we deal with as a ETF provider. We want to put out a thematic ETF, but there's all these themes where a lot of big companies participate, and maybe they're big, but they also have much bigger businesses that influence their market cap and share price. It's like one of those right now is quantum. I keep getting pings on quantum computing, and there's maybe like 7 pure play names. So do we cobble together a bunch of other names that are kind of associated, and maybe it'll grow into it? I don't know.
Are you guys pretty purist with your thematic? Because sometimes you'll have thematic and it'll be, self-driving cars, and then it'll be like, well, Google's like 10% of it. And it's like, well, yeah, sure, it's self-driving car exposure, but yeah.
Yeah, we've tended to take the purist approach. I think with some newer themes that have been out there, that have come out, maybe there's different approaches, but still, I think the purist approach is the way that we've built our business. And we think it makes sense. I mean, I think that's in the case of, say, Waymo. If you were to invest in self-driving cars and all you had were Google and Tesla in there, and then it's like, okay, you probably have those in other parts of your portfolio in pretty large quantities. So yeah, ideally, it'd be great to be able to just get exposure to just that aspect of it.
Are you allowed to share your favorite themes right now?
I'm really hopeful on medical technology and where we might go with that. I'm not exactly sure what it is, whether it's something in genetics that helps us live longer or cures various diseases. To me, that would be fascinating. Though it makes me wonder, do I want to live that much past 100? And, that's more of a portfolio I have to have. But stuff like that's fascinating. Space travel, too, I think is where could we go with that? So I don't know. We play in the world of themes, and there's a lot of cool stuff out there.
I agree. I mean, that's another one actually that, say what you will about Elon. I mentioned the Waymo, the ChatGPT. The other thing that I remember was so fascinating was that video of like the SpaceX rocket where it landed and they were able to park it without it like that was like incredible, right? So it's interesting. I mean, Elon's a character, but there's certain things where you see it and you're like, wow, that's something special for sure.
Yeah, it's amazing. Well, cool. Hey, you ready for a little trend or fads or speed round?
Sure. Yeah, let's do it.
Let's see. I think I know the answer to this one already. Finfluencers, trend or fad?
I obviously think it's a trend. But, yeah. Do you want me to elaborate or just say trend or fad?
Up to you.
Well, I can elaborate on that one. I think it's interesting. Like, finfluencers will get such a bad rep because there are certainly some bad apples who are doing like, paid stock promotion, selling these like crazy, like high ticket courses, like saying, oh, I'm going to help you get rich. But there's a bunch who are, just servicing. One of the ones we work with, her name is Joy. She's like started when she was like 19, documented her journey like as like a server, like learning her own personal finance and wealth. Like, is she a financial advisor? Like, no, but there's a whole generation of people who relate to her content and like the way she speaks and engages, better than like, they would with like a bank. Right. And so because of her, like thousands and, maybe tens of thousands of people have started investing in for the first time. Right. And so I think with anything, like there's good and there's bad, but I think in general, finfluencers especially have been a force for good in like getting people into the markets. Now, should that be your like only stop? No, like you should deepen your knowledge and learn again how to fish for yourself and, think for yourself and all of those. But in general, like I think investing early is always a good thing. So
yeah, absolutely. Okay. AI powered stock picking, trend or fad?
Oh, I want to say fad because like, I guess we just don't have enough data. Can an AI outperform the market? Like maybe my gut would say no, but I could be very wrong about that. I think AI as like a portfolio, like support, like telling you like, areas to optimize on taxes and all, like there's a lot of tools like that can give you like insights into your portfolio. I think that could be a trend, but I think like the AI stock picker that's going to help you 10x. I mean, a lot of them are scams. So that's why I would say like fad, but maybe one will emerge that can, is like the next Warren Buffett of AI or something.
Yeah. I've always wondered, like, if we had all the different AIs coming up with stock picks, wouldn't they eventually just all converge to one and pick the same thing given the same parameters? I don't know.
That's the thing. Yeah. Because it is sort of just basing it. I mean, again, I'm not super deep on AI, but it's like just essentially the culmination of like human knowledge, and it pulls a lot from Reddit. It pulls a lot from, these other sources. So
yeah.
Maybe if you're giving, I guess if you were making like a really good one, you'd train it on certain parameters. Like certainly I think AI can help you in, like, if you think of like a stock screener, like before you used to have to kind of search through or filter or anything. Like I think AI can empower people to like if you have a thesis around like, hey, I want things of this theme with this PE, like that sort of thing could be interesting. I mean, what Public is doing with their like portfolio indexing is somewhat interesting. Like you can tell it a theme and then it'll tell you like a basket of stocks that will kind of match that theme.
Absolutely. Okay. Tokenization, trend or fad?
That's one I just don't know
That's fair.
enough about. Like my gut, again, like people may strongly disagree with this, but it just seems like the fees are really high. Like if you're buying like a tokenized NVIDIA or what have you, but who knows? I mean, I'm sure that's something you know more about coming from the ETF industry, because you guys probably talk about that a lot.
It's coming. Do people talk about digital assets on your platform a lot? Is that a big discussion?
Yeah, they'll talk about crypto, and there's not as much conversation around tokenization. I mean, from my understanding, Robinhood only launched that in Europe, right?
Yeah.
I don't think it's live in US yet, but do you see that? I mean, I was chatting with the NASDAQ about it because it's probably a bigger threat to like the exchange business.
Mm-hmm.
So that's something they're thinking a lot about, because it's like, well, if you're buying tokenized stocks, then you're not trading on the exchange. And so that's going to hurt their revenue, obviously. But
yeah, a lot to figure out. I mean, I think I've heard that too. They're talking about that or have applied for being able to offer tokenization or trading, but more to come on that. And then how about this? Nuclear power, trend or fad?
I think that one's certainly a trend. All these I've answered pretty wishy-washy, but I think from everything I've read, or I even had some ex-McKinsey colleagues who went and worked in nuclear. I mean, from my understanding, it is one of like the cleanest energy sources, but there's just a lot of like political, not even political, but just like with things like Chernobyl and stuff like that, like almost social pushback against it. It's seen as this like bad thing, but I think if we can get over that, from my understanding, it's actually like a huge potential energy source.
And I guess I'm hopeful that there's this new technology and the small modular reactors that come online and they're safer, smaller footprint, and those nuclear accidents of the past are in the past. But we'll see. But I'm hopeful for that industry as well.
Yeah, me too. I think it's super capital intensive. So from what I've heard, like the startup they worked with was just like constantly raising like capital over and over again. So I think as an investing theme, I need to look more into it. But I think certainly it's funny with any of these things, right? Like with AI, I'm like, yeah, do I believe AI is the future? Certainly. Does that mean I necessarily am going to like invest it? Like just because I think something is the future or that it is a trend doesn't necessarily mean I think it's like a good time to invest in it.
Yeah.
So it's, or that I, even quantum, right? Jensen Huang makes like one statement around it and it like crashes the whole market. And then he comes out and you say, just kidding. And then it's like back up. I'm like, do I want to invest in something like that volatile? Personally, like, no, but for people have much bigger risk appetite than I do. So good luck to you all.
Absolutely. And good luck to you and your business and growing it. I just want to say thank you so much for coming on the podcast and talking about your perspectives.
Yeah, thanks, Ed. It was a pleasure.
What's the best way for people to learn more about Blossom and maybe perhaps follow Blossom or follow you?
Yeah, if you go blossomsocial.com, that's the best way to find me, or Max Stocks. I think it's on Max Stocks is my username.
That's awesome.
For anyone listening, I showed my sleeve here. I have it on my sleeve.
That's a great username. Okay.
You can see my portfolio. Yeah, it's good, eh? Like it's the Max, that's my name, and then Max return.
That's great. Yeah. Well, great. Again, thank you so much. And thank you for tuning in to another episode of Trends with Benefits.